Welcome back. Today we're diving deep into Eaton Corporation.
To help you figure out if it's a good fit for your portfolio.
Exactly.
Their ticker symbol is ETN on the New York Stock Exchange.
We'll be looking at their history, how they operate, now their financials.
And what the future holds for them.
Right, we've done a lot of research, articles, financial data, all that.
To give you the big picture.
So Eaton's been around for over 100 years.
Wow.
Yeah, back in 1911, they started making truck axles.
Huh.
Since then, they've grown a lot of acquisitions, expanding into automotive electrical aerospace.
A big turning point was in 2012 when they reincorporated in Ireland after acquiring Cooper Industries.
Right, and that move really changed their structure and their tax strategy.
It did.
Speaking of acquisitions, Eaton's made a few strategic moves to boost their portfolio.
Like back in '94 when they got the Westinghouse Distribution and Controls business unit.
Yeah, and that brought in the Cutler Hammer brand.
Expanded their reach in the electrical distribution and control market.
For sure. Then more recently in 2021, Eaton acquired AAA.
For $1.65 billion.
That one focused on expanding their offerings in edge computing and single-phase UPS systems.
Shows they're adapting to new tech, especially in edge computing.
It does, but then they also divested their hydraulics business to Danfoss.
Yeah, in 2021 for $3.3 billion.
It's interesting how they're streamlining and focusing on high-growth areas.
Ew.
So let's break down how Eaton operates now.
Okay, their business has two main sectors, electrical and industrial.
The electrical sector provides a lot of different products.
Yeah, like circuit breakers, switchgear, UPS systems.
And those are key for electrical infrastructure across industries.
Absolutely. Now their industrial sector is diverse aerospace vehicle and e-mobility segments.
And their vehicle segment is known for powertrain systems, especially the Road Ranger brand for commercial vehicles.
Road Ranger's got a big market share in heavy-duty truck transmissions in North America.
Gives Eaton a real edge there.
It does. The e-mobility segment that shows Eaton's thinking ahead, combining electrical and vehicle tech for the EV market.
That's expected to be a big growth driver in the coming years.
It is.
So let's dive into their financials. As of December 20th, 2024, their stock is at $338.12 a share.
They offer a yearly dividend of $3.76.
Giving a dividend yield of 1.11%, paid out every quarter.
Eaton's got a solid track record. They've raised their dividend for 14 years straight.
Which is great for income investors looking for that passive income.
But investors need to think about if that dividend growth can last, especially with their payout ratio and future decisions on capital.
Good point. Looking at Eaton's stock performance with technical indicators paints a mixed picture.
Yeah, moving averages are suggesting a sell signal.
But then you've got indicators like the Commodity Channel Index and Williams-Bursar giving buy signals.
The CCI looks at the current price compared to an average price over time.
While Williams-Bursar shows the close relative to the high-low range over a period.
These mixed signals tell investors to be cautious and dig deeper into Eaton's financials before jumping in.
For sure. To understand Eaton's potential, we need to look at their innovation pipeline.
They're going after intelligent power management solutions, setting themselves up for growth in a world that needs reliable and efficient power.
Right, they're investing heavily in digitalization and the Internet of Things.
They know those are becoming huge in power management. They're putting money into advanced materials, additive manufacturing power, electronics, and AI.
Eaton set up these innovation hubs all over the world to drive their research.
They're strategically placed to tap into the global talent pool and work with top research institutions.
Makes sense.
Their Eaton research labs, those are focused on developing big innovations for organic growth.
So what are they working on?
Advancements in power, electronics, energy storage, advanced materials, creating the next generation of power management solutions.
And then there's the Center for Intelligent Power.
The CIP.
Right, what's their focus?
They're tackling the challenges of a data-driven future using data analytics.
So they're developing algorithms and extracting insights from tons of data.
To optimize power systems, improve efficiency, and make the grid more reliable.
That's becoming super important as power grids get more complex.
It is. Then you've got the Eaton India Innovation Center, the EIC.
What's their role?
They're key in developing sustainable technologies and design processes.
Focusing on solutions for emerging markets.
Right, contributing to Eaton's global sustainability initiatives and expanding their reach in high-growth regions.
It's impressive how they're taking a global approach to innovation.
It is. And they're not just working alone, they're collaborating with universities, national labs, government agencies.
Across 12 countries.
Yeah, these partnerships give them access to cutting-edge research, diverse perspectives, specialized expertise,
Clearly accelerates their innovation pipeline.
and strengthens their position in the evolving power management landscape.
Okay, so let's weigh the pros and cons of having Eaton stock in your portfolio.
All right, one of the biggest draws for income investors is their strong dividend history.
Like we mentioned, they've consistently increased their dividend for 14 years.
Shows they're committed to rewarding shareholders.
Another plus is their diverse business model.
Operating in different sectors, electrical, aerospace, vehicle, e-mobility.
Gives them some protection against downturns in any one industry.
Right, it helps reduce risk and provides more stable earnings stream.
And their focus on innovation, especially in e-mobility and intelligent power management.
That positions them well to capitalize on future trends like electrification and digitalization.
As the world moves towards sustainable energy solutions, Eaton's ready to benefit.
They are, but there are some downsides to think about.
Like their recent stock performance,
Some technical indicators show signs of weakness.
which raises concerns about their short-term growth.
Then there's the fact that Eaton's been involved in legal issues and tax avoidance controversies in the past,
That might raise ethical concerns for some investors.
and could lead to reputational damage or financial penalties down the line.
Their move to Ireland while offering tax advantages.
Also exposes them to risks from changes in global tax laws.
Any changes in those regulations could impact your profitability.
Definitely. Now figuring out Eaton's valuation is key to see if their stock is priced right,
Right now, they're trading at a price-to-earnings ratio of about 18.
which is a bit higher than the industry average.
Suggests that investors are willing to pay a premium for Eaton's earnings.
Maybe because of their strong market position and growth potential.
But it's important to look at other valuation metrics too.
Things like price to sales ratio, price to book ratio, free cash flow yield.
Comparing those to industry peers and historical averages can tell you if Eaton is overvalued, undervalued, or fairly valued.
Exactly. Now let's talk about their dividend policy and share buyback strategy.
Those are big parts of their capital allocation decisions.
They are.
We've already talked about their impressive dividend growth.
14 years of increases.
It shows they're committed to rewarding shareholders and they're confident in future earnings.
Their current annual dividend is $3.76 per share, paid out quarterly.
Gives a yield of 1.11%. Pretty attractive in the current market.
Especially for income-oriented investors. But it's important to look beyond just the yield.
You have to consider the sustainability of the dividend.
A high yield can sometimes be a warning sign if it's not supported by strong earnings and a healthy payout ratio.
So how sustainable is Eaton's dividend?
Well, their current payout ratio is about 40%,
Okay.
meaning they're paying out a reasonable part of their earnings as dividends.
Right?
They're keeping enough to invest in growth and keep a strong financial position.
So that balance between rewarding shareholders and reinvesting
It's a good sign.
points to a well-managed dividend policy.
Yeah.
What about their share buyback strategy?
Share buybacks are another way companies can give back value to shareholders.
How so?
When they buy back their own shares, it reduces the number of shares out there,
Okay.
which can boost earnings per share and maybe even increase the stock price.
Has Eaton been actively buying back shares?
It's been kind of inconsistent lately. Not as aggressive as some other companies in the industry.
So why would that worry some investors?
Sure, buybacks can be good in certain situations,
Right.
but they can also mean a company is struggling to find good investment opportunities for growth.
Something to think about.
Definitely.
Beyond the numbers, how does Eaton do in terms of environmental, social, and governance factors?
ESG.
Yeah, those are important for investors who care about more than just financial returns.
Eaton's made good progress improving their ESG profile. They've set big sustainability goals,
Like what?
focusing on reducing their environmental impact and promoting diversity and inclusion in their workforce.
Have those efforts been recognized?
They have. They've gotten awards and high rankings for their responsible corporate practices.
Such as?
For example, they were listed among the top 100 best corporate citizens by Corporate Responsibility magazine.
Okay.
But, their past controversy.
With tax avoidance?
Yeah, that's raised concerns for some ESG-focused investors. It's something to remember as you do your research.
So overall, Eaton is a global leader in power management.
They've got a diverse business model, a solid dividend history, a commitment to innovation and sustainability.
But like with any investment, you got to weigh the pros and cons.
They've got challenges.
Like recent stock performance weakness, past controversies, questions about their capital allocation strategy.
Yeah.
The decision to invest in Eaton Corporation is up to you.
We hope this deep dive gave you some insights to help you decide.
Remember to do your own research
And think about your investment goals and risk tolerance.
before making any decisions.
Absolutely.
Thanks for joining us for this deep dive into Eaton Corporation.
Don't forget to subscribe to our YouTube channel and let us know what you think about Eaton in the comments.
We're always looking for new ideas, so tell us what stocks you want us to cover in future deep dives.
We'll see you next time.